Good.
When we come back, we'll talk to a couple of folks with maybe a little bit different view. Barbara Buckley's the former speaker, and we're talking to an attorney who says, you know what, this isn't much of a settlement. Stick around. Welcome back across Nevada to Face to Face. What will that multi-state mortgage settlement do for you? We're talking about it today, and now joining me, the woman behind Nevada's foreclosure mediation process, former Speaker Barbara Buckley, and an attorney who says the settlement won't do much, Las Vegas lawyer Edward Miley. Welcome to both of you.
Thanks, sir.
All right, the Attorney General, as I mentioned, is having a press conference as we speak, Madam Speaker. What she said is that this is a step in the right direction. Is it a baby step? Is it a large step? What kind of step is it?
Well, I think it remains to be seen as we try to digest the agreement, which is quite lengthy, and we see how many people are benefited from it. You know, there's some clear, great provisions in the settlement agreement, servicing standards, and I believe she'll be announcing that she was successful in getting an additional guaranteed pot for the state of Nevada for principal reductions, which is what we've been missing since we're so underwater.
But it's still a relatively small amount of money when you divide it by the number of people who are underwater in their homes, am I right?
Absolutely. I mean, the level of devastation we've seen, I mean, we're #1 in the nation in homes underwater. But she did get a Nevada guarantee, which most of the other states did not get. Right now, it's on a first come, first serve, as I understand.
You mean a guaranteed amount of money?
Yes, for the state of Nevada. For the rest of the nation, it's first come, first serve, so I think that's going to help us a little bit more. But, you know, there's also a sense, though, because we've been so hardest hit, you know, that, you know, people are angry, and it doesn't help a lot of those folks who were wrongfully foreclosed upon, and reserving that to their private right of action. And so,
that'll take forever, right? That'll take forever for them to get any relief, if they get any relief at all, right?
Absolutely. Yeah. And I think that's, you know, what the Attorney General had to weigh as well. I mean, the choice is she could have proceeded with Bank of America, added other lenders, litigated. Right now that case is in the Ninth Circuit. By the time it finally gets resolved, we're 5 years down the line. Everybody's lost their house by then. Weighed against all the other attorney generals proceeding with negotiation now. So the additional pot for Nevada, I think, was a good negotiating tactic on her part.
You know, it's interesting because knowing her, I bet part of her really wanted to pursue that, and it was tough for her to settle. Let me show you, Mr. Miley, what you had to say in a press release, that despite whatever deal the Attorney General has struck, the big banks are going to continue to foreclose on hundreds of Nevada homeowners. Here's what you said. The big banks are hoping to swamp the legal system. They are filing so many cases of judicial foreclosure, they're hoping many average Nevada homeowners who often can't afford the costly legal fees to fight protracted battles with these giant lenders will just give up and walk away.
They haven't filed yet. It's my understanding that they're weighing the option. They're potentially going to do it. Whether they're waiting for the settlement to go through or not before they do it, whether the settlement makes any difference or not, my understanding is, just rumors I've heard around the country and around here, is that they're waiting to see what happens. They don't like the foreclosure mediation program as it's structured right now, especially after the Supreme Court gave some teeth to it a couple weeks ago, and they're potentially going to file judicial foreclosure actions here and try and bypass the mediation program completely.
Well, we'll talk to the Speaker about that in a moment, but do you think that this is a giant step, a small step, a non-step, this entire step? I mean, the Speaker is essentially arguing that, okay, at least we're going to get some guaranteed money. That's something. Is it something?
We are getting something, and if you look and see, I think that the Attorney General negotiated a better deal for us than most states got. I think she did a great job with what she had. It's a business decision, and she decided, based on all the factors, pros and cons, this is the best thing for Nevada. The point is, though, is that the Nevada Attorney General is giving up his right to go after these people civilly, so now Joe Sixpack, who's upside down in his house, potentially filing for bankruptcy, is going to have to go after the banks individually. California and Florida folded. They got a lot more money than Joe Sixpack. The point is that he needs help now, and the banks have agreed, oh, if we took your house 2 years ago, maybe you'll get $2,000. Maybe we shouldn't have done it in the first place. If you went to a jury, maybe we'd have to give your money back and pay punitive damages. But here's $2,000. Have a nice day.
But you listen. You guys are the lawyers. I only play one on this program. Answer this question for me. If you don't agree to give up the right to go after them civilly, the banks never make the deal. They take their chances in some of the criminal cases, which are much more difficult to prove. That's why they made the deal, right? Am I missing something?
Well, it's obviously a win for the banks.
Yeah.
I mean, otherwise they wouldn't have done it. The banks, what the banks tend to do is they negotiate something, and then they try and go back to Congress or whatever it is and potentially change the rules. So that's my impression of what the banks typically try and do. So they negotiated this in their best interest. The question I have for everybody is, they're announcing it's done, they're still negotiating on it. I want to see it. I want to have some people look at it. If there's an emergency to sign it, do a 30-day moratorium on all the banks doing anything. Let people look at it. Let the press look at it. Let the bankers look at it. Let AARP look at it. Is it fair? Is it not fair? Can we make it better?
It is
early.
What are the problems? We should mention that. When we come back, let's talk to both of you about one of your legacies, which is the foreclosure mediation program. How does this affect it? How is it working? Did the Supreme Court, as he said, really give it teeth? We'll talk about that when Face to Face returns. Stick around. Welcome back across Nevada to Face to Face. You've probably heard about that huge housing foreclosure settlement that the administration announced. How is it going to help you if your house is underwater? If you're expecting a big dump truck to dump money on your lawn, that's not quite what's happening. We're talking to a couple of experts about that. Former Speaker Barbara Buckley helped pass the foreclosure mediation program, and Edward Miley is a local attorney. Foreclosure mediation program has had some controversy. The banks have protested, not surprisingly, right? There's been some evidence we've talked about on this program that they're not bringing the proper documents. The Supreme Court, which is overseeing this, has stepped in, as Mr. Miley pointed out, tried to give it more teeth. Is it working, and how does this help or hurt the foreclosure mediation program?
Well, for every person who has a modification come out of the foreclosure mediation program, or for everyone who has a foreclosure stopped because the lender doesn't have the right documents, it's helping them. The most striking thing about the Nevada foreclosure mediation program is the number of lenders and servicers who are not complying. 42% of the cases we are seeing non-compliance by the lenders. They can't find the documents, they can't produce certified copies of the documents, and that's an amazing number.
What's amazing is that what's the penalty for doing that, Madam Speaker? What is the penalty?
Well, the penalty in the foreclosure mediation program is that they can't foreclose.
Yeah.
And now,
but shouldn't there be some punitive, something more punitive than that, if they're going to, because they're fighting this tooth and nail, right?
Right. Well, first of all, the first penalty is that they can't foreclose, and then the district court can impose sanctions. The district court has not really done that. And now the Nevada Supreme Court has stepped in and said, no, you have to do it.
Right.
It's mandatory.
Which is what they should have done. But let me ask you, Mr. Miley. I mean, this was definitely well-intentioned. I was there. I saw when this was done. I mean, the legislature recognized this problem going on in the state. But you're skeptical. You think some of these mediations actually leave homeowners in worse shape than before.
Well, it may help them a little bit. The problem is that, let's say you can do a mediation on your home or whatever it is. They're not changing the principal balance. So you're in a house that's worth $150,000 now. You owe $300,000 on it, and they're going to work out terms. You pay less of a payment, and you're going to stay in your house. Well, that's great, but 15 years from now or 20 years from now, your house is worth now $300,000, which maybe it's going to be worth on the fair market value. Potentially, people are better off letting their house go into foreclosure, buying the house across the street for fair market value of $150,000, and then 10 years from now, there's equity.
But that's terrible for the current economy. What you've just suggested shouldn't the imperative be to keep these people in their houses at least now, while you're dealing with the overall problem of the housing market? I'm just playing devil's advocate.
Well, it's interesting. First of all, I think the bank should do some serious loan modifications. Say, look, if we're going to foreclose on this house for $150,000, and that's what we're going to realize if we sell it at a short sale or foreclosure, why don't we work out a deal? Instead of $150,000, why don't you pay us $175,000? We'll get some money out of it. It's a better deal for us. It's a better deal for you. You get to keep your house. And once Joe Sixpack can afford his house, then he's going to go on vacation. Then he's going to go buy a car. Then he's going to stimulate the economy.
I mean, you hit the nail on the head. That's not a failing of the Nevada foreclosure mediation program. That's a failing of the bank and the servicer not recognizing they're going to make more money if they modify the mortgage.
We're out of time. Barbara Buckley, Edward Miley, thanks for coming on the program. And on the next Face to Face, the Mob Museum. Is it Oscar's boondoggle, or will it be a tourist mecca? We'll talk about it. Have a great weekend, everybody.